Good evening. First of all, thank you to Mint for inviting me and bringing together such a esteemed gathering. So the topic I was given was the next 40 trillion, right? And I guess the genesis is that the industry has grown to about 46 lakh crores, 46 trillion rupees in AUM. If I looked at history in 2000, this number was just about 1 lakh crores, right? And roughly the industry over this 20-year period has doubled in AUM every 5 years or so. If I look at the last few years, in fact, this journey has been quicker. In less than 4 years, the industry AUM has doubled. So I think the question that comes, the next 40 trillion, when will it happen? I think the answer is fairly simple. It will happen in the next 5 years. We know India's nominal GDP grows at double-digit rate. On top of that, Anand spoke about the fact that there is more financialization of savings. So savings are growing faster than GDP. Financial savings are growing better than savings rate. So I don't think unless we as an industry do something drastically wrong, the trend in the next 5 years should be much different from what we have seen over the past 2 decades. So maybe it's in next 4 years, maybe it's next 6 years. Sometime during that time frame, we will see the move forward to the next 40 trillion. But I think more than AUM, so more than the growth in AUM, I would like to highlight some other trends which I think make the journey a lot more interesting. I think Neil spoke about we as responsible participants of the economy and the financial ecosystem, right? So this is what I call some pointers to democratization of mutual funds, right? 5 years ago, there were less than 2 crore individual investors. I'm not talking about folios, I'm talking about investors. Today, this number is close to about 4 crores. Right? If I look in terms of number of income tax filers, because as you know, all of us mutual fund industry operates with the anchoring of PAN number. So we have moved from about 31% of PAN holder penetration to about 51% of PAN holder penetration. Another encouraging trend is the number of women investing. So that number has also doubled. That number is close to 75 lakh women investors. And equally interesting is that it is no longer dominated by just top 5 metros. So just 5 years ago, about 2/3 of the industry AUM was emanating from the top 5 metros. Outside top 5 contribution is now close to half for the industry. I think Anant has left, but I think one thing he spoke about was the responsibility of the industry in terms of selling the products wisely, responsibly. I think one of the observations I have, and frankly, I have come into the industry only 6 months ago. I had the outside view for the last 28 years. So my inside out view now is actually very different. I think mutual fund industry in India has evolved from being an investment industry to an asset allocation industry, right? 75% of inflows that have happened into the mutual fund in the last 2 years have come through the most popular SIPs. In the last 6 months, as I have in the new role gone out, met various investment advisors, I'm actually amazed by the fact that when anyone introduces himself, he says, I'm so-and-so, I'm Sandeep Jain, I manage 600 crores of AUM. So the only thing they mention in their introduction is not that I sold 200 crores of mutual funds or 50 crores of mutual fund. They just mention their AUM. I think the regulator has also contributed to this. with the fact that commissions are now more and more paid on a trail basis rather than upfronting of commission. So the entire industry has moved to AUM in terms of selling. I have met distributors, investment advisors who have now got their children into their business, right? Because they actually see that this is not an annuity, it's a perpetuity, right? And I think really my personal belief is, and I'm sure people have different views, that I think with this shift, the risk of mis-selling in this industry has drastically reduced, because none of the distributors wants to let go of a client, right? Most of the distributors, when they advise a client, they don't advise buy X mutual fund or Y mutual fund. They just say, you start a SIP in this mutual fund. And as the panel before also talked about, that if you have duration in your equity investment, the probability of poor experience really comes down. And I think the distributors understand that, because they are now actually not looking to sell a mutual fund, but they are actually interested in building a perpetuity for their, not just their clients, but for their family. Another important aspect is that direct funds now contribute 20% of the fund. Passive share has increased to about 17%. And I think one thing that needs to change and further enhance this experience, and I think the trends of last 2 years of sales coming through SIPs, is that the tenor of investments of investors needs to go up. So currently, the average tenor is still only about 2 years. But as I see the persistency itself in SIPs, and we have some SIPs persisting for 4 or 5 years, I think increasing tenor will also enhance the return of investors from the mutual funds. The last aspect I think I would like to touch upon is that what is the value proposition of funds, right? And I want to kind of take 2 vantage points for this. What is the value proposition for the investors? What is the value proposition of mutual funds as a player or a financial intermediary in the ecosystem? If I look at really from the investor point of view, I think we have enough data that has consistently come through, whether you look at 10-year, 15-year, 20-year, what the returns has generated, particularly on the equity fund side. On the debt side, yes, now returns, as the previous panel talked about, there are, but I think the point came across that compared to other fixed income instruments, there are still advantages. I think Sandeep spoke about the fact that how deferment of tax increases or enhances return to investors. There are probably there's a debate of active versus passive funds. I talked about the fact that today less than 20% of industry in India is at passive funds. Globally, this number is getting close to about 50%. Maybe this trend in India will also continue in that direction. But at least we as active are happy to report that we are still generating alpha. So if I look 3, 5, 10-year track record, the degree of alpha generation has come down. And in fact, that is why there's no surprise there is increasing amount of flow to other categories. I still think that mutual funds offer a compelling value proposition to investors. But not just investors, I wanted to actually probably less appreciated is what mutual funds do as a financial intermediary. And Neil, to your point that how are the pipes, right? So we are the pipe in the ecosystem. We are funneling money from the household sector to the corporate sector as well, right? And there, I believe, actually mutual funds are the most efficient financial intermediary. If I look at the difference between what is the return provided to investor versus what is the return generated, right? Mutual funds, the average cost is only about 1.4%. The differential between these two is only about 1.4%. Government bonds at 6-7%, they keep cash. Still their average yield on the book is close to 7.5-8%, while what they on average pay to depositors is less than 5%. So the intermediation cost of banks is close to 400 basis points. If I for the insurance industry, the cost is actually similar, and in many kind of products, it is even higher, where the industry kind of generates a return of between 7 to 9%, and actually the return, at least the financial return to policyholders is sub 3%. Of course, there is another service they provide, right? Even if we look at a conservative 2:1 debt equity financing, that will mean that equity capital or this capital that where the mutual fund industry is doing. I totally agree. This capital to the ecosystem, it is going into the safest asset classes. But if I look on the equity side, I think really the mutual fund industry is the key provider of this capital, beside of course the promoters as well as companies' own cash flows or internal accruals. If I look at the IPOs that have happened over the past 2 years, nearly half of that was raised by these companies ultimately ended up coming from the mutual fund industry, right? We talk about the fact that there is a great and thriving startup ecosystem, venture capital ecosystem, private equity ecosystem. But if you look at data, ultimately all that ecosystem again needs capital from the public market, and really the biggest provider when summarizing with these 2.1, mutual fund industry is probably one of the most efficient intermediary in the ecosystem. Secondly, it is also one of the key provider of this capital into the ecosystem. Thank you.